On Business Incorporated today, UN Food and Agriculture Organization says world farmers must produce 50% more food to feed global population by 2050. South Africa's ESCOM plans another week of rolling blackouts. And Angola to attend the Intra-African Fair with about 20 companies. Hello and welcome to the program. I'm Chimeze Obi Iwagu. We kick off this week's edition with market numbers from major equities on the African continent. And trading was mostly in the green at intraday as Nigeria's main index rose 0.05%, while South Africa's performance index increased by 0.11%. On the flip side, Egypt's EGX 30 declined by 0.67% at intraday. Meanwhile, the Nairobi Stock Exchange closed Friday's trading session in negative territory, down 1.42%. Over to the Middle East, where trading activities were mixed at intraday. The Abu Dhabi index climbed by 0.91%, while Dubai's main index rose slightly by 0.10%. Still within the region, Saudi Arabia and the Qatari exchanges recorded losses at intraday. Both indices fell 0.21% and 0.02% each. And European stocks were flat in early trade, lacking clear direction at the start of the new trading week. For more developments from the European space, we have Chelsea. Hi, Chelsea. Good afternoon. Good to see you in a new week. Well, the U.S. is reopening its doors to European visitors once again, starting today. What kind of impact will this have on travel?
It's certainly a very exciting day for a lot of European airlines. This travel route has been closed for about 19 months, and it's also one that's very crucial for a lot of European airlines. European airlines do tend to be more dependent on transatlantic travel than, airlines in the United States, for example. So we have companies like Lufthansa here in Germany that get about 25% of their revenues from transatlantic travel. In pre-pandemic years, Virgin Atlantic in the UK, even more dependent. They typically get about 60 to 70% of their revenues from transatlantic travel. So many are very excited that they will be able to start flying these routes again. One of the big questions overhanging this reopening, though, is whether we're going to see a demand pick up very strongly. A lot of airlines have indicated that bookings are surging for the months ahead going through the holiday season. But one of the big potential letdowns is business travel. So these airlines do tend to make a lot of their profits from business travel when companies pay for workers to get upgraded to business class or to first class. But because things are still happening to a large part remotely, we still have a lot of conferences and events going digital only. There is a concern that maybe we won't see business travel pick up, until maybe the end of next year. So that's something that could really sort of dim the hopes for this reopening.
And European gas prices have surged as investors bet Russia won't come through with a promised increase in supplies. How serious is this?
It's definitely a major concern. We've actually seen gas futures here in Europe rise by about 10% today. Keep in mind, it's already basically tripled this year. So prices are extremely high right now because we just don't have enough supply. Gas stockpiles here in Europe are at about a 10-year low. And a big problem is that is Russia. So Russia is Europe's biggest natural gas supplier, but it hasn't been sending as much gas this year as many had hoped. We had seen in the past couple of weeks Russian President Vladimir Putin say that they will start to send more gas starting today. Actually, it doesn't look like they're doing that yet. So that's stoking concerns that Russia isn't going to follow through on those promises. So we have seen prices start to rally once again. It is a very critical situation because gas stockpiles are so low and because we've already started this winter on a very cold note. So it's been colder than normal. It's expected to get even colder next week. So we're running through those very low stockpiles already. So we could see Russia come through with more gas in the days ahead, but that's really going to be the main factor determining whether we have enough natural gas for this winter.
In the meantime, the European Central Bank's top economist said today he still believes the surge in inflation is temporary. Why is he so confident?
Well, that is, the main economic question right now. Is the global inflation surge something temporary? Is it something more chronic? What we've heard from Philip Lane, who is the ECB's chief economist, is that he still believes that this is a temporary increase. He says that because of how quickly the economy has reopened, many producers of things like energy or raw materials just haven't been able to keep up with that demand. So he sees it more as a supply problem that will start to mitigate potentially next year. We will get an inflation read tomorrow here in Germany. It's expected to rise by about 6% year over year and about 0.6% month over month. These are extremely high figures still. So for a lot of businesses, for a lot of consumers, for a lot of households who are seeing sharply higher prices, they still will be, they won't necessarily be, calmed by central bankers saying that this is going to go away next year, because they are getting hit by these price increases right now.
Well, we'll sure keep a tab on those inflation numbers, and whether temporary or persistent, only time will tell. Thank you, Chelsea. Also in the UK, flights are resuming to the US as the White House lifted its travel restrictions for fully vaccinated international air and land border travelers. Juliana will bring us up to speed with that and more. Hey, Juliana, good afternoon. A momentous day for aviation as UK-USA travel reopens. Bring us up to speed with activities at the airports. Which of the airlines have taken off?
Good afternoon, Chimezie. Well, as you were just discussing there with Chelsea, this transatlantic flight is really at the heartbeat of the aviation sector across the world, but particularly for here in the UK, especially business class travel. That's where the big airlines get their real buck. So there was lots of media coverage at Heathrow Airport today. There were two flights that took off simultaneously, a rare feat for pilots. Virgin and British Airways, both flying from Terminal 3 to New York's JFK. And that's not the only one. According to some estimates, there are over 3,500 flights booked between Britain and the US this month. So it sounds like a big figure, but if you compare it to pre-pandemic levels of November 2019, it's just 50% short of that. But there is a big build-up. As has been said, it's been over 600 days since UK citizens are unable to fly to the US. Of course, there have been some flights, and this is really for diplomatic travel for key workers. And much later during the pandemic, the corridor did open for fully vaccinated US citizens. But now, it's wide open, and the aviation sector are really hoping that this is going to be the end of what's been absolutely disastrous 18 to 19 months, and they can start getting passenger numbers back in the skies once again. But I think particularly when it comes to the transatlantic route, it's that business class travel that is fundamental. And according to some estimates, it's going to take another 2 years before you see people, not doing Zooms and deciding to conduct business face to face again.
Absolutely, and we look forward to that if we'll ever get to that. All right, in another development, a senior Irish minister says the UK's trade deal with the EU could collapse in a row over Northern Ireland. What more can you tell us about this assertion?
Yeah, well, the Brexit issue is not going anywhere fast, and the Irish Foreign Minister, Simon Coveney, has been speaking to RTE, which is the Irish national broadcaster, really doubling down on some comments we've had over the weekend, including from former Conservative Prime Minister John Major, Labour leader Sir Keir Starmer, and also some ministers, senior ministers within the EU. And they're talking about the triggering of Article 16, which potentially potentially could be triggered after COP26. Of course, the British government are hosting world leaders. Week 2 has just kicked off today, so they're really focusing on that. But Brexit isn't going anywhere, and this is all about, yet again, the island of Ireland and the really sticky Northern Ireland Protocol, which really hasn't kicked off. Lots of businesses that are struggling with the border that's been put into the Irish Sea are saying that business just isn't booming as usual. It's just far too much bureaucracy, particularly when it comes around chilled meats. And so it seems as if the British government, led by Prime Minister Boris Johnson, wants to tear that protocol up. And that's not coming with much ease. I believe some senior members of the EU believe by doing that, Britain are forcing their hand and they're trying to get away with things that they can't get away with. And of course, if there is no border between the Irish Sea, then it does allow back access to the single market. Of course, Britain will refute that claim. But Boris Johnson does have his critics. And I think the strongest one did come from Sir John Major, who said that it would be an absolute disaster and it would be ridiculous for Britain to do so. So, yes, it's a contentious issue, as, of course, everybody knew it would be. But at the moment, it does still seem as if Britain is still trying to focus on COP, trying to get some of these global warming pledges over the line. And once Friday, Saturday comes, all eyes will be on Article 16 and whether or not Britain will trigger it.
Well, it's a new trading week. What's the state of the markets this intraday? And, of course, how was the rest of the week going to be?
It is a new trading week, Chimmy. The week started off pretty much flat and the FTSE is still in the red at intraday. It seems as if investors are still hung over by last week's pretty shock decision by Andrew Bailey and the rest of the Monetary Policy Committee, who decided to keep interest rates on hold at 0.1%. I think the markets had priced in that perhaps interest rates could be lifted for the first time in 3 years to 0.25%. And this is, of course, to curb inflation, which is currently running at 3.1% here in the UK, much higher than the 2% that the Bank of England have as a benchmark. And, of course, this is really starting to trickle down to prices. Fuel prices are higher, energy prices are higher. Businesses are complaining about there being increased demand and not enough supply because, of course, supply shortages remain a massive issue. So this is all weighing in at the markets at intraday. The FTSE All-Share is down 0.03%. The FTSE 100 also down by 0.01%, and the FTSE 250 is down by 0.15%. In the currencies market, the British pound is up on the US dollar by 0.01%, also up on the euro by 0.06%, and down today on the Japanese yen at 0.03%, Shimmy.
Great, Juliana. We hope for a good and brighter week. Enjoy the rest of the day.
You too, thank you.
And shares in Asia Pacific were mixed in Monday trade as investors react to China's trade data released over the weekend. Mainland Chinese stocks recovered from earlier losses, with the Shanghai Composite up 0.1%, while the Shenzhen Component hovered slightly higher. Hong Kong's Hang Seng Index dipped 0.57%. South Korea's Kospi led losses among region's major markets, falling 0.93%. The Nikkei 225 in Japan traded 0.31% lower, while the Topix Index fell 0.3%. Australian stocks were also in negative territory, with the S&P ASX 200 dipping 0.21%. And in the U.S., stock futures rose in early trading after the major U.S. market indices reached record highs on Friday following a better-than-expected October jobs report. Futures on the Dow Jones Industrial Average gained 85 points, S&P 500 futures were flat, and Nasdaq 100 futures traded in mildly negative territory. The moves in futures trading came after the U.S. House of Representatives late on Friday passed a more than $1 trillion infrastructure bill, sending the legislation to President Joe Biden for his signature. Investors await fresh inflation readings in the week ahead. The Producer Price Index and Consumer Price Index are slated for release on Tuesday and Wednesday. Economists expect both reports to remain hot for October. Companies including PayPal, Palantir, and Disney report quarterly earnings this week. And after the break, the Food and Agriculture Organization calls on world farmers to produce 50% more food to feed global population by 2050. That and more after the break. To stay with us. The Food and Agriculture Organization of the United Nations has harped on the need for farmers around the world to have access to quality seeds. According to the Director General of the organization, this would enable the farmers to produce 50% more food for the global population, predicted to reach about 10 billion by 2050. Speaking at a global conference on green development of seed industries hosted by the FAO boss maintains that green and climate-resilient agriculture is supported by innovation and is critical to making sure that agri-food systems increase their benefits. Also, he noted that producing lower greenhouse gas emissions was fundamental for sustainability. The development, according to him, would ensure food security, improve human well-being, create opportunities for employment and decent work for all, and protect the planet now and in the future. All right, let's look at South Africa. Last week, it had its 2021 local government elections. The outcome of the election has been described as one that will go down in history as a watershed moment in the country's politics. Electoral support for the ruling African National Congress dropped below 50% for the first time since the party ascended to government 27 years ago. Why is the great deal on the outcome of this election, and what does it mean for the economy and the ruling party? I'm being joined by an economic analyst there in South Africa, Trinity Nkube. Thanks, Mr. Nkube, for joining us on the program. Good afternoon. It's always a pleasure to have you on the show.
Thank you for having me. It's been a while.
Right. Well, the outcome of the election indicates some staggeringly low level of trust. Can this be attributed to what a lot of people would describe as a deepening socioeconomic misery?
Absolutely. What we are seeing here is what we are seeing being manifested on the outside is a direct reflection of the low levels of consciousness that we're having among our leaders in society. So there are social issues. People believe that they deserve better, and it's not just the leaders that we are having are not putting out what people are expecting in terms of service delivery. So that has been directly reflected in this recent election.
Now, how much impact would you say the municipalities have had, in South Africa's economic development and improvement in livelihoods of citizens?
That's a great question. So when you look at municipality level, we're looking at all household levels. When those are not thriving, the entire economy itself will not thrive. So we're having really serious issues when you have municipalities hardly having any clean audits. That is problematic. So again, we're not here to condemn or judge our leaders, but it's very clear that people deserve better service delivery, as well as just providing the basics, looking at energy and so forth. So yeah, that it's problematic for the economy, because we need to start at household level, building wealth for each household, as well as just having decent health and some of the very basic fundamentals. So yes, it's very problematic to build an economy or to develop it all if you do not have those fundamentals in place.
Now, getting the economy right is a major responsibility of every government. How do you think the results of this election will direct economic policies of President Ramaphosa and his team going forward?
I'm very hopeful that there can be a coalition where parties can come together. It's going to be very challenging for a lot of parties with all these differences to actually come together. But what I see is that it's going to push the ANC to do better, to actually see this is serious, because after this, you're going to have presidential elections. So when they don't have the majority, it's going to be problematic, and the public have spoken. So hopefully this is going to push, it's going to serve as an impetus to all the leaders to come together and actually work, because when everybody's working together, South Africa is going to thrive, and it's just the best for everybody. Look at how we are one of the highest we have the highest income inequality in the world. So as long as there's a certain sector in communities who have more and others do not have, it's going to be problematic to develop a country. So again, it's going to bring some cooperation and collaboration among parties, among leaders, setting aside some differences to work together.
Yeah. Now, Mr. Nkube, one story getting to us today talked about the fact that ESCOM is planning another, or rather has started the third consecutive week of implementing rolling blackouts. And we know that this issue with ESCOM and blackout is a major issue that this government has really not gotten a hang of or haven't been able to find a solution to. And I think citizens like you also have problems with. How is that playing out? Because I understand that this rollout starts today.
It's problematic. I mean, we are lucky to even be speaking together right now because the power could go out anytime soon. And that is problematic for businesses. It interrupts businesses. And however, we're looking at a situation where if we can have a permanent solution to this issue, because we seem to be putting bandages on this issue. We sort out this, we have core issues, we have supply chain issues, and then we have corruption on that end. It's very problematic. There's no two ways of putting it. We're looking at maybe 10% of the economy has been hurt by these interruptions. So something long-term needs to be done.
Well, before I let you go, last week the country won a commitment from a group of rich nations for at least $8.5 billion, and of course, a technical assistance towards a transition to a low-carbon economy. And of course, we know that ESCOM, of course, transmits energy with coal. What's your take on this feat achieved last week?
It is a very welcome move. That $8.5 billion translated the ongoing exchange rate to about 130, billion rands. One would hope that money can go into use, and there are actually opportunities within clean energy, and we would like to see that being used to create jobs, as well as to go into clean energy, as well as just to have more environmentally friendly economic policies, in which case we won't be relying too much on coal and other fossil fuels. So that is great on paper, and we hope that this money can be used in very productive ways. What I'm also looking at as an economist is that I like this deal because it puts a lot of accountability on our leaders, because now it's not just the Central Bank of South Africa giving funds to the ruling party. It's more about the government, where after a few years, we would look at accountability. The world would like to know, what did you do with the $8.5 billion that we gave you to have clean energy? And then perhaps we can do away with all these issues with ESCOM and blackouts.
Oh, we hope so. Thank you very much, Mr. Nkube, for your time today. We do appreciate it. Enjoy the rest of the day.
You're welcome. Have a blessed week as well.
In the meantime, still in South Africa, the embattled state-owned power utility ESCOM has announced a third consecutive week of implementing rolling blackouts after 2 power plants are tripped. 2 units were unable to return to service on time, and Zambia's power generation decreased, impacting the Southern African power pool. ESCOM will cut 2,000 megawatts of power from the South African grid until 5 a.m. on Saturday. ESCOM has enforced countrywide power cuts for 9 out of the 11 months of this year. And in just 1 week to the start of the 2nd edition of the Intra-African Trade Fair, which takes place in Durban, South Africa, Angola has announced it will participate with around 20 companies. The event, which begins on the 15th of November through 21st, comes under the motto Transforming Africa. Angola hopes, through the Private Investment and Export Promotion Agency, to attract investors to the most diverse sectors of the economy with the presentation of a set of business opportunities, tax incentives, and favorable conditions provided for in the law of private investment. The business class, which will occupy a large part of the Angola Pavilion, will seek to establish partnerships and exhibit their products and services. According to the organizers of IATF 2021, projections for this event indicate business and investments valued at $40 billion against $32 billion in the first edition, which was in 2018. And that's a wrap on the program. Thank you for watching. I'm Chimeze Obi Iwagu.